Hot inflation in Middle East strikes send Wall Street tumbling into extreme fear today.
Welcome. This is Daily Market in 3 minutes. Let's dive in Wall Street. Markets took a heavy beating today. The Dow Jones Industrial Average dropped 769 points to 46,225. The S&P 500 fell 91 points to 6,625. The Nasdaq tumbled 327 points to 22,152. The Magnificent Seven stocks universally suffered. Microsoft, Amazon, and Apple dropped nearly 2%.
Tesla fell 1.6%, Meta lost 1.1%, Alphabet shed 1%, and Nvidia edged down 0.9%. Energy and utilities were the clear winning sectors today. Information technology, consumer discretionary, and financials were the biggest losers. Bitcoin plunged 4% to just above $71,000. Gold fell 4% to $4,814 an ounce, and silver dropped 6% to $75. Meanwhile, WTI crude oil surged 4% to over $98 a barrel. Today's plunge was driven by a hotter-than-expected February producer price index. Wholesale inflation spiked 0.7%, pushing the annual rate up to 3.4%. This shattered the disinflation narrative, directly causing the broad equity sell-off and dragging down gold as investors braced for tighter monetary policy. Adding to the chaos is a severe escalation in the Middle East. United States and Israeli forces struck Iranian missile infrastructure, prompting Iran to blockade the Strait of Hormuz. This massive supply chain shock wiped out 20% of global oil supply. This geopolitical crisis caused WTI crude prices to skyrocket, lifting the energy sector while sending risk assets like Bitcoin into a tailspin. Finally, the Federal Reserve held interest rates steady at 3.5 to 3.75%. Their updated dot plot was hawkish, projecting only one 25 basis point rate cut for 2026. This higher-for-longer rate environment suffocated the Magnificent Seven tech stocks and fueled the broader market retreat today. Looking at macro indicators, the 10-year Treasury yield advanced to 4.23%. The 10 to 2-year curve spread jumped over 15% to 31 basis points. The US dollar index climbed to 99.78, while the VIX volatility index spiked to 23.59. This toxic combination of a surging dollar, rising yields, and spiking volatility choked both equities and precious metals. Retail sentiment has collapsed, with the CNN Fear and Greed Index plunging to a score of 21. This places the market firmly in extreme fear territory as participants panic over stagflation risks. The market outlook is locked in a state of grinding uncertainty. Investors are trapped in a stagflationary regime, meaning momentum remains sideways to down until either the inflation fever breaks or the Middle East blockade de-escalates. Looking ahead to the next 7 days, markets will closely watch the European Central Bank rate decision. We also have critical weekly jobless claims data coming out, followed by highly anticipated corporate earnings from GameStop. As always, this video is for informational purposes only and is not financial advice. Please like and subscribe for more. See you next time.